Are the markets setting up for a massive move in the second half of 2025? That's the question we want to answer in today's video, looking at the charts, the data, and the stats across the US stock markets, Bitcoin, and of course, the real estate cycle. We've got some very interesting stuff coming up for you today, so make sure you hit the like button, subscribe to the channel. It's your home of macro cycle analysis. As I said, I'll be covering the stock markets, the real estate cycle, commodities, Bitcoin, and you can throw in your altcoins as well. Now, the free crypto and economic report has gone out to your email inboxes. If you haven't got it already, name, email address, and you'll be on the list for the next one. Let's kick it off with the term recession. And we saw recession getting revised here from the Atlanta Fed over the last couple of days. This one here, just last updated 25 minutes ago. They were looking at the GDP dropping from negative 2.8 to negative 3.7. So getting worse, which some are calling for a recession based on these numbers. Now, if you've been following the channel going back now 4 weeks, I assume most of you have, that's about a month, we saw the highest search volume for recession at that point. The analysis and the information that I was sharing with you on that day is that around these times in the market, going back over the entire history of the search term recession through Google, has shown these to be very handsome times looking at your reward to risk when it comes to your trading portfolios. Now, that could be for the stock markets, real estate, commodities, whatever it is you're trading. Usually around the times when recession has been at some of its highest search volume for a comparable period, generally it marks a low or around a low. Now, of course, we don't have Bitcoin's data going back any further than when it began in 2009. And then, of course, it took a few more years until there was enough solid price analysis or price data to perform analysis on as it was coming into the market. But we're seeing similar things. You can look at the recession calls. June 2022 wasn't the exact low, but it was very close to the price low for BTC. You can go back to the recession calls a couple of times earlier here, August 2019, but the larger one was March 2020. Huge fears of recession lasting for years. Yet the Fed came out, printed a ton of money, pushed things right back up, making the markets explode. You could literally say explode from that point. Now we're here in March 2025, 5 years later, very high search volume for recession, everyone getting absolutely freaked out, usually off the back of Trump's tariffs or Trump talking or Trump doing something. And now we see the price basically stall here for the last 4 weeks into our fourth week. So from here, clearing off the search volume of recession, and the Atlanta Fed lowering their Q1 GDP estimates, which are also due to come out from the Fed sometime in the next month or two. The idea here is that maybe the stock market, maybe investors have begun to price this in already. And this 10% correction that we've seen on the stock markets may in fact be the total correction, or it wouldn't be too far off. Now, I've got something interesting to add on top of that when we're looking at these major corrections, as I've got something in the title around the markets exploding from that point. We want to look at how far these markets can go after significant corrections, provided we're still in a macro bull market. Now, of course, there's got to be invalidation levels. No one knows what's happening on the black side for sure. We're just trying to weigh up the probabilities. If we've seen certain things like this before, how often and how likely is it to do something similar in the future? Maybe 8 times out of 10, 9 times out of 10, it's going to go up. How much is it going to go up? Roughly to what degree? And if it doesn't, that 1 or 2 times out of 10, 3 times out of 10, perhaps it doesn't do what it has done in the past, where are we going to put those invalidation levels? That's basically part of your trading and investing plan. So Atlanta Fed done, recession terms looked at. When you see this thing happen and it starts to cool off, what generally happens from that point? That's what we look at for the stock markets. But first, let's just cover a couple more bits of the data that have come through. Just looking at the Forex factory, this one here is a pretty good one. Just have a look at the high impact news announcements. We've had a few releases here. For the Aussies, cash rate remained the same, 4.1%. You guys in Europe and the US obviously don't give a crap about that, but that's just for the Aussies. Now, onto the US stuff. President Trump speaking coming up, unemployment claims, PMI, earnings, non-farm. So a lot of these high impact news announcements are due to come out this week, but I don't think it's going to make that much of a difference to the markets. I think we've got to wait until the next lot come through next week. GDP, CPI, that's the sort of stuff that might bring a little more volatility. But this is where, obviously in my opinion, where the technical analysis comes in. If we are already beginning to see, at least on the short term, some signs of a trend changing, it could even be in the short term, even just a little bit of a move up, using the swing here, then anything moving into those volatile news announcements, the red meaning high impact news announcements, are essentially just going to create volatility for the day or maybe day or two after, and continue on with the trend. So if we begin to see a trend form, which as you can see from up here, 1 day, 1 bar, it is an uncertain trend. You've got higher highs, lower lows. So the trend is clearly uncertain. It's a bit of a misnomer there, clearly uncertain. But you've got a 1 day, 2 bar down, 1 week, 1 bar down. We have to assume that the trend is still going to go down. So where does that leave us next before I get onto these big hopium predictions to the upside? You know the deal, hit the like button. Let's take a look at the levels on the chart here. So I'm just going to go across to the SP 500 E-mini futures where all the trading is done. The same level, 5,838, talked about that in previous videos, and the diagonal. So this diagonal, I've got connected a couple of these lows. So it's the bear market low to the banking crisis low. And you can see we came right up, tested it, tested the 50%, market has been rejected from that. So anything underneath our level of 5,800 and call it 40 for a round number, essentially could be a noise, consolidation, or time for a retest of the downtrend because the market is still in a downtrend. Now, the thing we're looking out for over the coming days as we lead into these events, which are coming up next week, we're the 2nd now, so it's the 10th. That's a week away, so 7 days, pretty long time in the markets for anyone hanging on for dear life. We can start to see some support above these levels, this start to turn green, and a breakout of 58.40. I suspect the volatility will come in and we'll continue to see the trend continue higher should we get a breakout of 5,840. That's basically the line in the sand here to flip from uncertainty into the strength. This is where we want to see the strength, and that's where you start to see the market explode to the upside, test some underside levels here, then get to the all-time high, 61.66, and then a potential breakout into new all-time highs. So we've got a bit coming up here, especially if we can get past 5,840. So that would lead me now back to the overall major moves. What has the market done before after a 10% correction? So this is what I'm doing here is looking at the corrective moves, and then how many times in the past has it done these sort of moves, 10% corrections, and what has it done from there? Just like when we look at the data points with some of the other analysis that we bring up. So we're at a 10.4 to the current low here, about 10.7. So what does that look like in past moves? So let's have a look at the July top to the August low is about 10% move, so 9.67. Also take a look at the 2023 move, which was 10.9. That was the big correction that lasted about 3 months into that October low, and then the market sprang out of there. Then we had the banking crisis low, which was actually only 9.2, so the smallest correction compared to this and what we currently have with the tariffs. Can you imagine that? The banking crisis of 2023, recession was due. Everyone was talking about the recession there. The search volume for recession was still sitting at 35. It doesn't look like much on the chart, but remember, we had just come off the back of recession talks for the prior 9 months. Every single day, recession, 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 and then it basically faded out from that point. So very, very big time in the market. And from there, it was a 9% drop from those highs. So what have we done from there? You got the lows, up to the first bounces, that's what I'm interested in, to see what could happen to these markets here and whether it leads up into any sort of resistance levels to the upside. So roughly about a 10% move into these highs of 41.80, 41.90. And at that time, you may or may not recall, the next fear was that the US was going to default on their debt ceiling. The same old story over and over again. I've been hearing about the debt ceiling for over a decade, and they just keep raising it. They just keep putting more money into the system, yet it was enough to scare people a little bit here. Then we get the boom up into July, so 21% before a significant correction. Okay, so there's the first number there. We want to throw 21% down. Low to the first resistance, which was the double top here, barely had a pullback, 12%. Let's rise up to the all-time high. So there's the all-time high, double topped right here. And that gave us about 16.5%. Still no significant correction, and we have to come all the way up to around 52.50, so about a 28%. So far we've got a 21, now we've got a 28. Reasonable correction here, nothing too out of the ordinary, about a 6%. Let's have a look at this one here as well. Low to the high, about 7.6%, to the next high, about 14%. Then we had the August correction. So 14%, a little lower here than the last two, 14, 21, 28, average it out, basically comes out around 21%. So let's have a look at this low to the top, 10%, smaller correction here, 12%, 14%, 17, 19, and rounded out to around 20 before we get this collapse that we're currently in. So if you look at those last four, the average is about 20, 21%. Now I might be getting a little ahead of myself here to claim that we would see some sort of 20% increase. So it wasn't a correction, I think it may have said correction, but a 20% increase from these lows. But if we want to play around with the hopium from the low here, 5,500 points, 10% takes us to these highs, or close enough to them. To the exact highs is going to be around 11.3%. And the 20% move is at about 6,600 points. So pretty reasonable gain here from these lows. And if you're looking at it in terms of a risk reward, well, then you can start to imagine, well, what is the risk to the downside? And measuring those levels from the low, so the 5,500 down to that level, about 2.7% from the current price down to the 5,400 low is about 4%. So then when you start to weigh those things up, it could go down 4%. Maybe we look a really bad case scenario all the way down to the August low, that's about 9%. But we've looked at the upside from these particular areas and looking at them being around 10 to 20%, then you can really start to weigh that up. Your reward to risk is 1 to the downside and 2 to the upside. So you put $100 in, that's everything you've got after betting on altcoins, betting on meme coins. You've done extremely well on the latest meme coin here that I talked about yesterday. And now you've got this money left in your portfolio, $100. It goes down 10%, or we look for it to go up potentially, because they're both potentially 20%. So we lose $10 or make $20 to the upside. Now they're the sort of risk reward returns that I would look for at a minimum when it comes to my portfolios, at an absolute minimum. You don't want to be doing 1-to-1 or less than that, especially if you're just looking to buy and hold to the long side. But I'll leave that up to you. That's the SP 500. We're looking at these levels where it could absolutely go bananas. 58.40 would be a first key level to get into strength, and then we'd start to watch this thing do what it does best and go up. Okay, so over to BTC, and on the short term, we've had some relatively good news over the last 24 hours. And when I say news, I'm talking about the charts here. We had a nice good day up. It was about 3.2%. The volume increase compared to yesterday. We've had a few nice clean closes at around the same price, so a nice push up higher here. And it closed above the short-term 50%. So this entire move to the downside. And generally, when we see the markets close above their 50% level, depending on the time frame we're looking at, then we can see a follow through for that. And that's, if we see the follow through, that's a good sign for the strength. Otherwise, back under tells you very quickly that that was a false break, and we're probably going to test the prices back to the downside. So somewhere back at around 82.5 or 83. So today, big things need to happen. We hold above 85, test that 86, which was the 50% on the larger time frame here. So this is from the Trump tweet of the crypto strategic reserve, Bitcoin strategic reserve, all the way down to the current low of this correction. So that roughly 30% correction from the top. Very important reference point. That level comes out at 85,800. So for a round number, we're going with $86,000. Now, if it happens today and we get above the diagonal downtrend as well, there's 87,500. So some closes above that level are going to be absolutely amazing, because then it puts it pretty much above all of the previous closes of the recent swing top. So it's suggesting that the buyers are really starting to come back stronger, even if we do see a turnaround and some higher lows get put in. Because I don't know if this is going to go straight up. No one knows if this is going to just catapult above 93 or 95. These things generally happen bit by bit. You start to see the bulls take control, the bears take control, the bulls come back in, and then it's basically just a game of to and fro until one of them can no longer handle it anymore. They're all making their losses. Everyone's got to jump ship and get onto the bull train or the bear train. So speaking of the bull train, 86 first level, 87.5, basically above these closing prices. So you can see there 87,523, 87,427, 86.9. Very, very clean moves up there if we can get there, 87.5. That takes us very close to the next level, as we talked about yesterday, 89. And then you've got the tops here at 93, 95. So one thing at a time. It's slow going, but at least this is a great sign in the early stages. So let's go and put all of the analysis together straight after I mention the crypto and economic report, link in the video description, name, email address. You'll be on list for that. And we have a new one coming out tomorrow, a trading update. So if you're on that list now, you will get that second email about trading updates, looking at Bitcoin this week. Okay, back to BTC and the invalidations. We know what we need to see to the upside. Should we get rejections here at 86 or 87, then of course we have the downtrend or the lows here to look at. 81,400 brings you back down to the 50% at 79. And then unfortunately the final low here at around $76,500. So the key levels now to hold 81.4, 79, and 76.5. So how much longer can this go on? Well, we've now got our crypto fear and greed index sitting at fear, and the time frame for the reset of the sentiment. I brought this to you months and months ago. The latest one, the post I could find here that went back to the patience, was 18th of March. Surely I could bring up something else, but you get the idea. Watching this, being patient with the market sentiment resetting can take its toll. The first time we dropped back into extreme fear, let's have a look on the fear and greed index, was this point here, 25th of February, 25, and then the 26th we saw a reading of 21. So it had to be the breakdown bar on the 25th. The new reading came out on the 26th, and you can see on the 25th actually, it broke all of these lows and the 89K low and closed below it. So that was the first time we really got extreme fear. And since then, we've been seeing the lows getting higher and the highs also getting higher. How much time is left from today to roughly around that 5-month mark? Basically 3 weeks. So we could see this thing resolve within April, and we start to see higher lows on the sentiment, even if we were to see some tests higher and some macro high lows being put in, price could come back into the 80s. It would suggest, at least I'd be looking at the probabilities, that we would see higher prices over the second half of Q2. Now, this is just based off the first trading day of Q2. So there's still 90 odd days left to go. Anything can happen, but this is basically where I've set my sights for now because of the current price areas, because of the market sentiment looking like it's resetting, and because we possibly only have about that 3-month period to wait until we really got some more clarity. Now that clarity could come sooner, and that would be for the bulls at least, big closes above 93 to 95, or for the bears, closes below 79. That would really start to shake things up, and you would see this drop back into extreme fear. So bringing it all together with the SP500 and BTC, what does an explosive move look like for Bitcoin once you start to see the S&P get going? Well, we have the August low to compare with, and the orange line is BTC, the white line is the S&P 500. So let's just measure Bitcoin from those closing prices like we've done with the S&P 500. Of course, who's going to buy the exact low of Bitcoin and sell the exact top? We get that. It's just for a reference area, and hopefully you're taking a chunk of profits out of the middle. For BTC, I'm going to have to use this. You've got the low here at 54,000 for the closes, that is, and then the tops here at about 105,000. So just short of 100%. So for the S&P 500, from those August lows to the tops, it did about that 18 to 20%. For Bitcoin, it was close to 100%. And of course, we know the low was 49, top was 109, so it was about 106%. Basically a factor of 5. 20% on the S&P, Bitcoin was about 100%. Let's take a look at one more, going back to this October low. Now, Bitcoin bottomed before the S&P 500, so we'll take a bit of an average for both of them. Remember, the S&P did approximately 15% for the first run, and then about 26 to 28% for that final run into this peak here. As for Bitcoin, somewhere in the middle here was about $27,000, and then the breakout was at 30. For it to run near this final top here, it was about 74,000. So we have about 1.5 times, about 150%, 30K up to 75K, double and a half. There you go, around 150%. Now you could get a little bit closer to it, call it the low in September, then you got 25K up to 75K, so nearly 200. But I like to stay a little bit more conservative there, call it around that 150 number. The last move was about 100. So even if we're to see this next move up being half of what Bitcoin's done in the recent move, that was the 100%. Well, then let's go 50% for BTC from the current $76,000 low. I can get my charts up. So 80 and 40K is going to take you up to around that $120,000. Do I think that's the end? No. Do I know if it's going to get there? Of course not. But I'm just trying to weigh up what might happen next, looking at the probabilities from the S&P 500 over the last 2 years, as we reviewed in the video today. So hit the like, subscribe to the channel. Let's see what happens over this Q2. I do think Q2 is going to give so many more answers to this bull market. I'm still obviously talking about it being a bull market because I haven't seen any breakdowns from that key structure. The first one being around $79,000, as we've covered throughout this entire 30% correction. 79, it's held up above it. Again, the 50% levels have done very, very well. And for the overall cycle, basically the entire bull market, we have the $62,000 level. So they're going all the way back to the bottom, and 62 slices it right through the middle. That's the current 50%. So still looking relatively good here, especially if it can break out of these highs. All right, guys, that's the update for today. Check out the videos from yesterday if you haven't already, and I'll see you back here for the next one tomorrow. Take care.